Level 1. The Financial Ostrich. Head in the sand. This is the person who has a 401k through work, has literally never looked at it, and genuinely believes investing is for rich people. Meanwhile, their savings account is paying them 0.01% interest, which, congratulations on $10,000, that's a whole dollar a year. You can almost afford a gumball. At this level, money just sits. It doesn't work for you. It doesn't grow. It just exists in a checking account waiting to be spent on something impulsive at 11 p.m. on Amazon. The tragedy here isn't ignorance, it's avoidance. People at level 1 aren't dumb. They're scared. And fear is expensive. But here's the thing. Once someone wakes up and takes that first step, everything changes. And level 2 is where it starts to get interesting. Level 2, the saver. Give them a round of applause. They figured out that spending less than you earn is, in fact, a good idea. Revolutionary. This person has an emergency fund, maybe a high-yield savings account. They could budget. They track expenses. They feel genuinely proud when they resist buying something on sale they didn't need in the first place. And look, this is progress. Real progress. But here's the problem. Saving alone doesn't build wealth. Inflation is out here eating 3 to 4% of your purchasing power every single year. Your money in a savings account is basically in a slow race against a thief. And the thief has a head start. The saver has discipline. They just haven't put that discipline to work yet. So what happens when the saver finally stops watching their money sit still and starts making it move? Welcome to level 3, where most people think they've made it. Level 3. The passive investor. Index funds. ETFs. Set it and forget it. This person discovered that 92% of actively managed funds underperform a market over a 15-year period and decided, very sensibly, to stop trying to beat the game and just be the game. They're putting money into a broad index fund every month, not touching it, and letting compound interest do what compound interest does, which is basically magic but with math. This is genuinely where most people should be. No stock picking. They're trying to time the market. Just consistent contributions, low fees, and time. The S&P 500 has averaged roughly 10% annually over the long haul. Put in $1,000 a month for 30 years at that rate, you're looking at nearly $2 million. From $1,000 a month. That's the boring superpower nobody talks about enough. Level 3 is solid. It's smart. But some people get curious, and curiosity leads them somewhere more dangerous. Because level 4 is where overconfidence enters the chat. Level 4, the active investor, stock picker, earnings call watcher. The person in the group chat going, "Have you looked at this chart though?" They're reading 10KS, following analysts, maybe dabbling in options. They believe, with full conviction, that they can find undervalued companies before the market does. And sometimes, they're right. The problem is they're also sometimes spectacularly, painfully wrong. And the losses hurt more than the wins feel good. That's just human psychology. Now, this isn't a bad level to be at if, and this is a big if you're educated, disciplined, and you're not betting the rent money on earnings plays. Warren Buffett does this. But Warren Buffett also has 60 years of reps and a team of analysts. You have Twitter and a lunch break. The active investor is engaged. They're learning. They're just walking a tightrope between skill and ego. And that's where things get either very good or very humbling. But what if instead of picking individual stocks, you started picking entire businesses? That's where level 5 flips the whole script. Level 5, real assets. We're talking real estate, rental properties, REITs, commodities, private lending, things you can touch, rent, or depreciate on a tax return. Here's what changes at this level. Cash flow. Not just appreciation, actual income hitting your account whether you get out of bed or not. A rental property spitting out $1,500 a month in net income isn't exciting until you realize that's $18,000 a year. Every year, often appreciating in value, with the mortgage being paid down by someone else's rent check. That's 3 income streams from one asset. Tax write-offs on top. Real estate in particular has created more millionaires than almost any other asset class in history. It's not glamorous. It's toilets and tenants and property managers. But it builds serious, tangible wealth. The catch? It requires capital, time, and knowing what you're doing, which is exactly why most people never get here. Level 5 builds wealth. But level 6? Level 6 is where you start building systems. Level 6, the business owner investor. This person doesn't just own assets, they own income-producing machines. They've built or bought a business that generates cash flow beyond their own labor. They reinvest profits. They understand leverage, not just financial leverage, but time leverage, people leverage, systems leverage. At this level, your money is working. Your business is working. Your employees are working. And ideally, you're working on the business, not in it. The difference between level 5 and level 6 is the difference between owning a rental property and owning a property management company. One scales slowly. The other can scale infinitely. Jeff Bezos didn't get rich buying index funds. He built a machine and then used that machine to buy everything else. That's level 6 thinking, and it completely rewires how you see money. And then there's the final level, the one most people don't even know exists. Level 7, the Capital Allocator. This is the apex. This is where money stops being something you earn and becomes something you deploy. At this level, you're not just investing in things, you're funding things. Venture capital, private equity, angel investing in early-stage companies. Family offices moving hundreds of millions across asset classes based on macro trends and risk models. The capital allocator doesn't need a job. They don't need a salary. Their entire world is, where does this dollar go to generate the maximum risk-adjusted return? They're the architects of wealth, not just the inhabitants of it. Think about it. When Elon Musk invests in something, he doesn't just get a return. He gets influence, access, and often a seat at a table that shapes entire industries. That's what money at scale does. It doesn't just multiply, it transforms. Most people will never reach level 7. But understanding it changes how you think at every other level. Because you stop asking, how do I make more money? And start asking, how do I make my money do more? So here's the real question. Which level are you at right now? And more importantly, which level are you aiming for? Because here's what nobody tells you. You don't need to skip levels. You just need to stop staying at the same one. Level 1 to level 2 is just a decision. Level 2 to level 3 is just a brokerage account. Level 3 to level 4 is just education. Every single jump is closer than it looks. The gap between where you are and where you want to be isn't money. It's knowledge. And that's actually great news, because knowledge is free, and you're already here watching this. If this hit different, drop a comment telling me what level you're at. No judgment, I mean it. And if you want the full breakdown on how to move up each level, subscribe, because that's exactly where we're going next. See you there.